Hi, I'm Amina. Welcome to my channel. Here I talk about personal finance and budgeting and all the other important topics in life. Today, specifically, I want to talk about 3 lessons that I learned during my accounting degree that I apply in my personal journey of finance. What are these 3 lessons? So, the first one, cash is king. In accounting, there is this concept of cash is king. Why? Why is cash important? Having excess cash and having liquidity is very important because it gives you flexibility. Translating it into my personal life or into your personal life, cash is king concept is, let's say, the emergency fund. Why is it important to have the emergency fund? Emergency fund allows you not to go to the bank when you are in indeed this emergency situation. Why is it important not to go to the bank with these short-term situations that you have? Going to the bank to ask for money means bank will never give it to you for free. Essentially, that means that if you borrow $1,000, you will give back, let's say, $1,100. You will pay them. This is the line of operation. They need to charge you because they're giving you money. No one's gonna give you money for free. Why is it also good? Is that it gives you the freedom and flexibility of doing something when the opportunity comes. Let's say there is a really good business opportunity and you have the money in your emergency fund and you want to risk it. Without this emergency fund, you wouldn't have been able to risk it, right? But now, because you have the flexibility, because you have this excess cash, you are able to risk it. We'll go and get into this opportunity knowing that, okay, I am taking the risk. I may lose all my emergency fund, but I may also gain. So you are fine taking the risk of losing all this emergency fund and getting into this risky business, correct? So we talked about how having excess cash is very important because it allows us 2 things. Take risks when we need, allows us to avoid paying high interest to the banks. In other words, it allows us to avoid getting into debt. Second of all, it allows us this flexibility, whether it's getting into high risky business that you are able to take. Second of all, it allows us to stop doing what we don't want or what we don't like to do in this moment because of this excess cash. Second lesson, the concept of depreciation. What is depreciation? Talking about context of luxury cars, because I think it's so important not to spend money on luxury cars in your 20s because there are more priorities in your 20s. Car is a depreciating asset. What does it mean? It means it loses value over time. Today I get a brand new Mercedes that costs $50,000. As soon as I get it out of the salon, it loses 5k directly. I didn't even drive. The mileage is still 0. It loses 5k. 3 months later, it lost another 10k, let's say. Now my car costs 35k. Now my car costs 35k. I spent 50k on it. Just in 3 months, I lost 15k. Okay, this is just for illustration purposes, okay? So that means I will never be able to resell my brand new Mercedes with the same money that I bought. Never. So it's a lost money. That's first thing. Second thing is that if you are borrowing money from the bank to get this car, not only you will repay more than 50k, because again, we need to pay money to the bank because money is never free from the bank. From anyone, in fact, okay? Money is never free from the bank. We always need to pay interest on the money that we borrow, okay? Not only we will be repaying more money to the bank for this car, the car is depreciating as well. Essentially, what's happening is that over time, the value of this car is decreasing whereas the money that you need to pay stays constant. So over time, okay, the gap between the value of the car and whatever you are repaying is increasing. The gap is increasing because the value is decreasing. So avoid buying luxury cars in your 20s at least. Third point regarding these depreciating assets is that, let's say you got a luxury car that was pre-owned, so it's definitely way cheaper now. Let me tell you that a luxury car that's cheap, it's never cheap. What do I mean by it? So you will get, let's say, a Mercedes today for 20k, okay, in a good condition, not too old, 5 years, maybe 6 years, okay, it's fine. You are driving it fine. But when it breaks down, the amount of money that you will need to repair it, it's going to be very, very costly to your pocket. This is what I mean by the cheap luxury car is never a cheap luxury car, because at some point it is going to break down. At the end of the day, it's a car, okay? The parts to repair this car are very expensive. The service of this car is very expensive because it's a luxury car, obviously, and it's expected. Actually, it is going to be expensive. I think it's important to know these concepts, not to make some bad financial decisions. And I hope you learned something new from this little talk. There is a third lesson that I learned. Budgeting and expense tracking are very important. Why is it important in accounting? Why is it important for the businesses? If the business doesn't track its expenses, its inventories, it won't survive long term. It will not, because when the business doesn't know where the money is going, how much the inventory costs, how much the inventory is bringing, how are you able to survive? It will not. So why don't we apply this in our lives as well? How many people track their expenses? I don't know many. We are not doing it because probably we are not taught to, right? So I apply this rule into my life. The way I apply, let's say I set aside a certain budget, okay, that I can spend a month. I can spend $100 this week. This is including all the food, all the coffees, all the outings, and I cannot go over it. I see, for example, today is Thursday and I spent $80 already. Okay, that means I have $20 to last me Friday, Saturday, Sunday. I need to stick to this budget. Then if you don't know where your money goes, you need to sit down, open Excel, and go through all the expenses, all the whatever you're using, credit card, you're using debit card, open all the expenses and write one by one how much you spend on what. Trust me, there is so many unnecessary things that we are buying, especially nowadays. We don't need that much. We really don't need. We don't need all these, like, I don't know, 10 t-shirts a month. We don't need 10 pants a month. We do not need them. If you really want to know where your money is going, open all your expenses, make an Excel sheet, mark in red whatever was unnecessary, and keep an eye on them next month. You will see the difference directly. For example, you spend $200 on the unnecessary things this month. If you know they were unnecessary, next month you will be $200 plus. And guess what you can do with these $200? You can set aside in the emergency fund so that we will have, over time, we will have the flexibility, we will have the emergency fund, and we can do whatever we want with those money when needed. Correct? But I thought it was important to mention again today. I know everybody heard all these things over again and again and again, but it's important to remember and remind that we are responsible for our finances and no one's gonna come and help us reach our financial goals and understand where we are spending money. If you like this video, please don't forget to like, subscribe, comment. Let me know what you think. I will be covering more topics on personal finance in the future. So see you in my next one.